Hello ladies and gentlemen, welcome to our webinar today. For of course the last webinar of this month, I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's trading system, ladies and gentlemen, that I will take a look along with you is based on just a few popular trend indicators. Of course, the combination of those two makes a powerful trading system that is suitable for any time frame and any instrument. By instrument, for those that are stepping into the market at this point of stage, we're focusing on currency pairs, commodities, indices, company shares, anything that you trade on the market. We call it as an instrument, a tradable instrument, so to speak. Of those that of course are more advanced to the market, to the strategies, and they want to learn something new. Of course, you might have your own point of view about the strategies that I'm presenting. We might discuss a few additional techniques if you have anything to propose, something that I might find attractive to, of course, include it into a webinar branded under your name. Furthermore to that, I would like to focus also on today's events. Now, as those are following the news quite often, you probably already know that in about 30 minutes time we're expecting the personal consumption expenditures for US and preliminary reports as well for the gross domestic product, something that I will revise along with you in about 26-7 minutes from now. So when the news starts coming out, we will switch between the charts. We'll have a look at the news, the impact of those announcements, that data that will come out on several different commodities, currencies, and of course align it with the few exceptions of today's trading system. As you know, the trading system that I'm presenting, I will probably repeat myself every time by saying that, but they focus on technical analysis. So whatever happens after announcements, this is the exception where the system might have a flaw. So if you're looking for absolute accuracy, especially on news, you better use a different strategy, especially on news announcements, which we already spoke about. That was the first webinar this month, the advanced news trading system from technical perspective with market pricing. That's a quite valuable trading system that you can incorporate not only to this particular system but to any particular system for the time being of the development of this particular news trend. Now, for those that have been here every time, they know exactly what I'm talking about. For those that are unfamiliar with these terms, and mostly of what I'm actually focusing on by saying that, if you're interested to find out more about it, you can contact me back or just send me an email, send me a message here on the chat below, just providing your email address or a telephone number if you wish. I'll get back to you as soon as the session is over. And we can discuss in personal one-on-one sessions something in addition to what you're interested in finding out. Now, the first thing that you need to understand about this particular strategy, it depends on the time frame. It's more of a waiting game. So it's like a hunter's game. So along the presentation, you will see that sometimes we need to have a confirmation. Sometimes we don't need to have a confirmation, depending on the time frame that we're looking for. Now, the one time frame that you have in front of you, that's the 1 hour time frame, the absolute time frame that everyone is looking at, as well as we will gradually go up and down those time frames to see how this strategy works. The first thing I'm going to start with is the already known indicator that we've been using, the last particular advanced systems. We've been speaking about the average directional movement index and what it measures. The only difference right now is that we will be using, so to speak, different setup on this ADX from a perspective of what you particularly want to see and want to have as a confirmation. The different setup have a different appearance, a different layout. Let's take a look at this average directional movement index. Another thing that I wanted to focus here is, as you can see, all my charts, they start with the basic, a basic candlestick chart with a 200 exponential moving average. For those that are wondering why, it's the most important, the one and only moving average that everyone should have on their charts. So here on trend, you will see average directional movement index. It really depends when exactly was the last time you've been using it. It will appear up here on the recent. So there are like about 6 indicators that the MetaTrader provides you with on top here. As you can see, those are from most recent to less recent usable, and the one that I've been used, average directional movement index, is down below. So I can click directly on this one and go straight to parameters. The last setup of the ADX that we've been using to find the direction of the trend, especially when we needed to find out which particular strategy to use at a given point of time in order to stay on top of the situation. Right now, we're much more interested in filtering out the fake signals. That's why the period, as you can see, it's much bigger. The last one we've been using 14. Right now, I'm using 50. The style of the average directional movement index is usually white with a thicker line, so we can recognize it. However, what we're mostly focusing on is pretty much the positive and negative directional indexes here, their own crossover points. This is what we're interested in. Now let's have a look how it looks on the chart. With the custom levels, as you can see, you can set up any kind of levels that you like or you feel like you're giving a good entry point, but the one that I have to say is a must is the 20 level, and I'm going to work down to average in one of those levels along the chart. Now the 45 is less usable as this is to a different particular strategy, and it's a more aggressive type of level, which I deliberately left on these levels here because sometimes I only choose a different period here. For example, I'm using the 14 if I need to see something else on the chart when I'm making my technical analysis every now and then. That's why I left the 45. But what you need to understand is when you have a period of 50, your 45 level is well hidden somewhere up here. So even if you stretch the ADX as far as you want, it won't really appear. It needs to have a very aggressive price movement to see it with a period of 50. So that's why you don't really need it. And even if you have it on your chart, it wouldn't appear. And something above level of 30, it's also the same. Now the level of 20, as you can see, is something that tells us that the trend is stronger. So as a break off from this point here, we have the certainty that the market will continue to the upside. Not only with just 1 or 2 candlesticks or after retracement to get to the same level, but actually develop a stronger trend. And even if you have retracements and turnarounds like this one here, with two crossovers followed one after another, your trend is still valid. It's still valid as long as your ADXs keep rising. However, that's not the only way we are actually using this indicator. That's why in this system it's been incorporated the parabolic support and resistance. Some of you might know it. The parabolic is actually used normally by the default levels. Someone might want to somehow decide to use something else, but I wouldn't recommend that. It wouldn't be that much accurate. So as you can see, I've also been using it quite recently, the parabolic, also called SAR, or SAR stands for support and resistance parabolic. So these are the default. I've chosen a different style so it can resemble better on my background here, so you can pretty much choose any color that you want. That's something very close to your mind. I don't want to bother with that. Let's take a look how it sees on this chart. Those little dots here are actually something like a moving average, or the support and resistance, but in a parabolic level. So it measures the strength of a previous candle, and if the retracement is higher than 50 to 66%, it actually signals a reversal. It's very simple. I wouldn't trouble you with formulas or something too complicated for you to start banging your head against the wall. It's not necessary. What you need to understand is that when you have, let me take the pencil here, it's very simple to understand. When you have a point of reversal such as this one, you know, the last one down and the one that appears below the candlestick is actually signaling a reversal to the upside. This is how some of the people are using it. Personally, I would like to combine it with the ADX. I need to have an additional confirmation whether the price is actually going up. It's very curious because if you have something like this, or like this one here, where it actually measures your retracement, it's very easy to make a mistake and, for example, sell something and get stopped out, and hit your stop loss at some point, and then make the same mistake. Of course, in a trend, in a very smooth 45-degree trend, these kinds of mistakes here, unless you hold your running loss like forever in order to wipe your account, you wouldn't make too many mistakes. Basically, if you follow the rule of reversal patterns as they appear here on the parabolic, you wouldn't make much of a mistake. But when you have the sideways range, this is highly likely to lose a lot of money instead of making. So you're either going to lose your time at the end of the day, you're going to just break even, or lose a little bit of cash or most of your account. So how this particular system works out, what are the levels, how do we enter, and how do we exit? It's very simple. We actually short or buy when those green and red lines cross over. This is the one thing that you should take under notice. But very important to remember, crossovers on a sideways range can occur quite often on the ADX. That's why we have the parabolic, in order to see whether you have a trend. But it's not enough. That's why we need the level of 20. As I mentioned, if a trend is strong enough to make you money, it should break off easily above level of 20 and stay above it for time being until a retracement comes on the market. Because when the trend weakens What I mean, it's not exhausted, but it weakens a little bit. Then a retracement comes. Everybody knows that. Which means those retracements usually occur some point at a bounce off of the 20 level and then back up to the 25, where is usually your exit. In most cases, you will see a break off of this 20 level if the reversal is larger than 33%. Because if you measure a direction from here to here with the Fibonacci retracement, you will pretty much see that level of 23.8 is somewhere here, and level 33 is somewhere here. So if you have a retracement about 33%, you will often see level of 20 breaking down, and then the crossover will bring the price back up, along with a bounce off of the Fibonacci here. Now I don't use it because it's quite visible where exactly the retracement is. If you just divide the distance between this and you find the center, which is the 50%, it's quite obvious that it's somewhere around the 33, and the 66 should be around here somewhere. So as we're on it, and we know that we need a break off of this 20 level, we need to look for at least 2 parabolics to close before entering the market. This is a certainty that you have a direction. It's very often seen one parabolic to occur to the downside and then starts developing new parabolics on the upside, which is actually signaling a downside. I will show you this when we scroll the chart a little bit backwards, how this might fail if you're entering on the first parabolic. And let me mention that this is pretty much only valid for time frames between this and this. I'm not going to go to weekly and monthly charts. It's quite obvious that the larger the time frame, the much often you will see a build-up on the parabolics. So from this time frame onwards, you need at least 2 parabolics as a confirmation. But from this one down, 1 is enough. Because, I will tell you why, because this is particularly from a 30 time frame. I didn't really configure it correctly, but let's say the pivot point is the 1 hour chart, so from here you have onwards 2 parabolics. In this one you need only 1 parabolic. It's very clear that the trend will often reverse and continue very often in a few candlestick closes. And retracements larger than 33% are highly likely to occur in a short time frame. Therefore, you don't need to wait for such a confirmation if you want to use smaller time frame. And let me mention, higher than 1 hour chart, from 1 hour onwards, the strategy gets much more accurate. So using it this way, you will find out that it's getting much more accurate, because less and less often you will see 3 parabolics, 2 parabolics, or 1 parabolic. You see there's 2 parabolics signaling a false, but it's actually a triangle breaking down and continuing to the downside with a trend. And this is the 1 hour chart. And here on the far left side you can see 1 parabolic. And this 1 parabolic usually forms, let me tell you how, when you have a few strong candlesticks and then the other one continues to the upside, but it's limited by some resistance levels, and then shoots straight down with a close. But this one develops right on the opening of this candlestick. So it doesn't matter if it closes down here. That doesn't necessarily mean that you have to buy this instrument, that it's going to be a reversal. Remember, the development of the parabolic dots are on the opening of the candlesticks. So it can often be a huge mistake for a trader to enter on the first parabolic. That's why you need to have a second one, because that will be a second opening which will be higher than 33%. especially when you're using it on small time frames, 1 minute, 5 minute, 15-minute charts, where gaps are much more often to occur. And in those cases, you will see dots all over the place, like this. We'll switch down to smaller chart time frames, and we can have a look at those to see how it develops. But the first thing is for me to set the rules of this strategy. So that's so it goes like this. I'm just going to go buy, sell above 20 level ADX. Crossover, of course. That's rule number 1. Rule number 2, H1 onwards D1, you need a close of 2 SARs, parabolics. Rule number 3, time frames M1 to M30, that's the 30-minute chart time frame, close 1 SAR. Now this I will put a star in this one as an exception, that it's only 1 parabolic. You can wait for a second one depending on the type of trader you are. So if you need a if you're looking for a bigger confirmation, you might want to look for another close. Another parabolic. That means more than 1 parabolics. But have in mind, dear trader, that more than 1 parabolics, especially on 1 and 5 minute time frames, it's very often to occur a retracement, especially when the market is moving with a great force, especially when we have a large volume on the market. That means 1 parabolic can bring a candlestick. Let's say we have 1 parabolic here, and your candlestick develops like this, okay, and it's very huge in size. Let's say 20-30 pips in size. You have no idea. And then another candlestick forms, which is of course a reversal candlestick, but this time you will have this one too, because the opening will be higher, and it's quite obvious that you will have another one here, but then you will have a reversal to the downside. So this second one that will occur will most definitely bring the price to go down with the parabolic. So you don't need to wait for a second one, because if you open a position here and you're waiting for the parabolic to continue to go up on a small time frames, it's very difficult to get a continuation of this trend, especially in small time frames. Fluctuations of the price like this one you will very often see on the chart. That's why you need to wait for 2 parabolics on larger time frames and 1 parabolic on smaller time frames. It's that easy. It's up to you actually to decide exactly how many parabolics you should wait. So as we set up the rules, the important part of the system, we will talk a little bit about the exits before we change the time frame and have a look at exactly how these parabolics are developing. Because here on this ugly drawing that I'm doing, because you know, I'm a technical trader, I'm not a painter, so you will excuse me about that. You will have a better eye on what the price is actually doing by having a confirmation of what I just said directly on the chart itself. So let's have a look at the closings of those positions and stop losses, of course. Everybody needs that. Now, the exit conditions are usually 2. All right. After we know that we need a confirmation from both indicators to cross over and then to move above the level of 20 to have a better trending power, should I put it this way, and 2 parabolics on the 1-hour chart, as you can see here. Then on the second crossover, you might want to close your position. This is the one deal. This is the one thing that you can do. Let's have a better look here. Okay, we have a strong trend developing here, but then the ADX gives us a signal someplace here, and we open. Then the next crossover comes straight over here. Sorry about that. We have a position open from here, and then our parabolic, our ADX, the next crossover is down here. Then it comes someplace around this one. So it's 185 pips of profit. That's $1,850 with one lot traded, as you can easily calculate it. This is pretty good. I like that. However, in most cases, a crossover such as this one here often occurs when the price is already retraced 50%. So that's why I have those levels here, 25, 27. 25 is more of a conservative type of trader that wants to book his profits a bit earlier before it's too late. Or you can have a different type of setup, having half of the position out on the 25, the rest of the position out on 27. As we can witness here, we have a 25 level. From here, our entry was here. That's 100 pips of profit. And the rest of it, plus 30, you get here. So it's not much of a loss, is it? Now that's about 50 pips out from this far away here. But you have a strong downtrend, which doesn't necessarily gives you the opportunity every time. We're looking at a 1-hour chart time frame. You have an uptrend, downtrend, uptrend, downtrend every day, a couple of times on the day. So crossovers such as this one, they occur very often, but also on the sideways. Stronger trend confirmation you can get from the rising ADX itself. So when you have a rising ADX plus a crossover of positive and negative directional indices above breaking the level of 20, you can enter the market with no problem. You have that opportunity here. Your parabolic is pointing up, and your exit is on the 25, which is this strong candlestick. That's about 100 pips of profit for about 8 hours time, as you can see directly here on this one. If you're waiting for 27, you are most definitely going to get it, but it's going to happen 22 hours later with another 125 pips of profit. However, you would definitely get it later on. But let's stop here for a second, divert our attention to the news that we're getting. As predicted earlier today in our signals, gross domestic product annualized is down 0.2% from previous 2.2% and consensus 1.1%. Also, gross domestic price index minus 0.1% from 0.4% revised and 0.2% previous. Core personal consumption expenditures, also preliminary report, 0.9% with 0.2% lower than previous, which was 1.1%. Now, let's get straight to the point here. We're looking at the euro going up, breaking about 30 pips, about the pivot point of $1.1 per euro. Let's take a look at the rest of the markets. We have gold pointing up. Crude oil is steady at the moment, as we mentioned. We have the pound slightly higher, but the resistance levels here are pretty big. However, if it manages to surpass the level of 155, this is the pivot point on daily to weekly basis, we might be able to see another 200 to 300 pips of profit, up to 600 pips of profit in the next few months. But that really much depends on the UK's elections. For those that are interested in that, we'll pretty much see a lot of strong momentum here on the yen in the next couple of minutes as well. This is the 4-hour chart. As you can see, strong retracement up on the dollar just before the news, and another 40 pips of movement down on the dollar against the yen. Now what we see here, ladies and gentlemen, this is just 1 hour, so that means in about 25 minutes time, when this candlestick closes, we might get a confirmation for a development of new down wave on the USD JPY. As you can see here, the confirmation will come above this level, and we will start developing new parabolics up here, which will point the direction of the pair to the downside. This is pretty much how you can see the anticipation of this particular system. You can see that the retracement is much higher. Of course, the fluctuation here is highly possible, especially in the next 1.5 hours. We have pending home sales year on year, also month on month, and later on in 5.5 hours we've got the federal interest rate decision. It's a big movement on the market today is what we're expecting. So for those that are trading with us, they already know how to pick our brains and find out the information they need in order to be successful in the market. For those that are not trading with us, you always can get in touch for a little bit more information, either on our webinar email, which is webinars@gdmfx.com, or directly at our phone lines. If you, of course, need to send us a message as well, you can do that throughout our support department. The chat pops out directly when you go into our website, gdmfx.com. All right then, let's take a look at the pound, for instance, with this particular strategy. As you can see, ladies and gentlemen, I'm pretty common for me is to have a look at the relative strength index as well to signal overbought and oversold conditions. It's not necessarily to use it, but it depends on the strategy. So instead of putting it in and putting it out all the time, I'm only changing the ADX 14 to 50 period. This is pretty much because of the different type of strategies that I usually use along throughout the trading day. But here, instead of getting you confused with anything, we'll just have a look at the recent development of this particular system. This one, I don't know what it is, kind of a horizontal line here. The break off of this 20 level comes a little bit later after the crossover itself, not much later, to be honest, just a few days. This is a daily chart, by the way, as you can see it. It also works quite well on a daily chart. The confirmation comes a little bit later on, but the retracement that we were getting here for this particular day, you can see that the candlestick is quite higher, a very large one, 55 pips. The previous day, this was the Sunday candlestick, not much of a movement, but the previous one is 26 pips, which means the real bodies of those candlesticks are relatively different in size, 2 to 1. The one that is bearish is 2 times bigger than one that is bullish. That's why we couldn't get a confirmation straight over here with a crossover of the ADX, and that would have been a good signal here when we have this break of the 20 level. That would have been a beautiful one, but we have no idea because this one, as it developed, it's just a beautiful evening star. Evening star formations are usually very powerful, especially on larger time frames. is for those that are familiar with chart patterns. But because we didn't get that crossover here, we couldn't enter the market earlier. Instead, we could have entered the market 2 days ago. It was here on this crossover from the opening of the day. And right now, our profits are running pretty good. 200 pips of profit, that's about $2,000 of profit on a daily basis. That's 3 days of trading. That's the third one today. So I do believe that there is nothing more that you would want from a strategy but to be accurate on all time frames. Let's have a look how it looks actually on the 4-hour time frame. The parabolic acts pretty well on this particular chart. You have a crossover. You can see that on this time frame. It is actually giving you the signal exactly what it should have given us at the beginning. You have that crossover here. You have that strength of that trend building. You have the parabolic below the price. You can long straight from here, and that's 450 pips of profit until this moment of time. That's $4,500 until today. And that's about a week time. And it keeps building it, as you can see. But one more thing I would like to mention to those that have long positions, you have to be wary about 1.55 level here. It's a lot of resistance. You can see a lot of shadows, a lot of candlesticks building here. And this was the pivot point, the turnaround from the recent slump of the pound, as well as the price is very close, just about 50 pips away from the 200 exponential, from where we might see a lot of a very strong move up and then a strong retracement to the downside. However, this is just one currency pair as we're talk about. Let's take a look at this one, for instance, what it's doing. It's developing this particular candlestick, as I mentioned. The dollar is weakening on the recent GDP preliminary data. We have a crossover here, so more aggressive traders are usually shorting directly from here, especially when they know that this candlestick they can catch some bigger move. But for those that are more of a conservative type of traders, wait for at least 1 up to 2 parabolics. The trend will not escape as long as the technical indicators are pointing the direction. And of course, as you can see here on this crossover, that it actually aligns with the development of the parabolics. You have the break of this 20 level here, your 25 level, and of course a profit of about 33, let's put them about 30 pips of profit for 7 hours of trading, 6 up to 7 hours of trading. That's about $300 of profit with one lot. That's a move I wouldn't miss, especially with such a confirmation and very close to each other. A crossover here, as you can see. It happens a little bit earlier, a few candlesticks before the move is actually happening, which is over here directly on the opening of this second parabolic, from where we have an additional 40 pips of profit precisely here in time. So you see, in about 5 up to 10 hours, in average, you will be able to make about 500 up to 1,000 US dollars of profit with one lot traded, and that's for 1 day. So imagine if you have a better capital, a bigger balance, so you can allow yourself a better trading, or if you don't have enough time and you have all that I just mentioned, switch to a bigger time frame, 4 hours to a daily chart, and you might be able to catch this particular move, which is a very substantial one. That's 1,353 pips of profit for about 32 days. So for 1 month, nearly $14,000 with only one lot, ladies and gentlemen. That's all. Speaking about the money, starts to itch between the fingers, so I would like to get back to my trading, and I will let you go. This is the last webinar for this month, ladies and gentlemen. Expect next month and the month after something else, different webinars, something from more fundamental perspective, as from a request from our junior traders here in the company. They were quite eager to find out, if they cannot be a technical trader, how would they trade the market successfully? Well, if you want to find out, sign up for next month's webinars. You know how to do that, and if you don't, send us an email and we'll send you the link back. Thanks for being here. See you next time. Bye-bye.